Welcome to today's video tutorial where we're going to go through swing trading cryptocurrencies. Now we're going to use a basic setup, so we're going to focus on the setup criteria for this particular strategy, and as it turns out, cryptocurrencies do tend to chart quite well, and the ability to use technical analysis on and across all the cryptocurrencies actually works out pretty well. So I'm just in my MT4 chart here. I've got Bitcoin up, but it doesn't matter if we're using Ethereum, Ripple, or Litecoin, or any of those. But just for the ease of example, we'll jump onto Bitcoin here. Now, as you can see through here, there's occasions when markets, like Bitcoin, trends extremely strongly. Now, the best indicators to use in trending markets are moving averages. They're slow to get you in, slow to get you out, but as it trends, that slow to get you out with a trending move is very advantageous. However, markets also get quite choppy through here and they create ranges. Now those ranges give us an opportunity to swing trade. Certainly what we tend to want to do with certain setups when it comes to swing trading is A, trade in the direction of the trend, and we like to buy weakness as it's in an uptrend but pulling back, and some sort of oscillator, maybe a stochastic or an RSI, would give us the opportunity to have an entry signal basically. So it would be oversold and looking to maybe turn and push back up to recent highs. So in a nutshell, the setup criteria for this is to look for uptrending cryptocurrencies, and as they're trending up, if they're ever oversold in a sideways or trendless market, that gives us an opportunity to jump in and buy. So always keep in mind, none of this is investment advice. You do need to backtest any of your strategies that you might look to employ, and keep in mind cryptocurrencies are very leveraged trading. Normally you only need a small amount up front, and it's extremely volatile. So there's a couple of caveats over this, so please make sure you're aware of that. Now let's jump in a little closer here. So what we're going to do, in this case, I'm just going to show you the short side because, as you can see, the market is heading down. So this swing trading strategy, typically what we do is we look at the 100 period moving average and we want to trade in the direction of the trend. So the way we look at that is today rising or falling today compared to yesterday. 1 day look back period, so we can get in early when there is a turn, because as you can appreciate, moving averages are extremely slow to get you in and slow to get you out, especially if we start using a 200 period moving average. So I tend to find the 100 period moving average can be quite advantageous. Now you could go down to a lower time frame if you wanted to, say using an hour, and this particular technique could be quite useful as an entry setup. It's just an entry setup. It's not an indication to buy or sell anything. However, it's a reasonable entry setup. It keeps you out of a lot of trades going the wrong way. So as I said, we have a look back 1 day, and we only buy when the market is rising, and we only short sell when the market is heading south, or the 100 period moving average is falling today compared to yesterday. The next gate, what we might call a gate, in order to get into this particular trade short, I'm going to take you through two. One is called bearish divergence because we're in a downtrend, so we're only looking to trade short, and the other one is just an overbought signal in a downtrend. Okay, so we're keeping it very straightforward, very, very simple, but it's food for thought, something that will enable you, give you something to backtest and see if it's actually meeting your criteria, your time frame, and your tolerance for risk and so on. So one of the great signals is bearish divergence. Bearish divergence, very simple, where the stock price or the price of the market you're tracking is heading higher. So in this case, the highs here are getting higher. And then as you can see down below here, at the same point in time, the indicator, in this case a 9 period stochastic, is actually getting lower. So that's divergence, that's bearish divergence. That's a very powerful signal. So what we look to do here is we would look to sell it off this bearish divergence as we see this point here, and then we would, that's the entry setup to trade short. And as you can see, it did rally down and trend lower there, which would have been quite nice to get. Now, the other time the signal comes up is when it is in a downtrend. As you can see, all through here is a downtrend. The 100 period moving average is falling today compared to yesterday, and the stochastic pops up. Usually my gate is 70, so it needs to be above 70. 80 is quite high. It just gives you a few more signals and a few more opportunities to consider for going short or long, in this case going short. So as you can see, it's actually above 70 at this point in time. So all through here we would look to trade short. So had you have got set on this particular one short at that level, obviously that would have worked out quite well. There was a period through here where it was gapping quite significantly from Friday to Monday. So that was another signal just through there. And we have another signal just through here. Now this is an interesting one. I want to show a loss as well. So in theory, this one, you would have got a short signal here. The market was heading lower. There is a third gate you could place on it, which is price action. And we want to see that the highs are getting lower. Okay, so in this case, yep, that meets the criteria. The highs are getting lower. You are overbought at this point in time. So had you taken this signal, I would suggest that you'd probably get out at a loss. The market did fall down. Okay, depending on how close you put your trailing stop, you might have got stopped out through here, or you might have kept it. Had you have kept it, depending on how slow your opportunity is to get out, the exit that you're using, you might have got a signal on that day there to exit, and then closed it the next day. So as you can see, that's a pretty significant loss through there. Okay, so the whole idea of swing trading is to make sure that your wins are bigger than your losses. And in this case, as you can see, that would have actually gone slightly against you there, possibly if you took that trade. So then through this point here, as you can see, the highs got higher through there, so you wouldn't have taken that signal because it's still in a downtrend and it's overbought. However, the highs are now making new highs. So then through here, once again, the highs are higher, even though it's in a downtrend and overbought. So in this case, when it is like that, back to here, you're looking for bearish divergence if that were to pop up. And in this case, there was no bearish divergence there. The indicator was going up as the market was going up as well for Bitcoin. So that's just a basic entry setup through there. Likewise, in this case, you would have been trading long, and the opposite of the price action gate would be you need to see that the lows are getting higher before you buy it in oversold there. So that would have ruled out those trades there because the lows are getting lower there. And in this case, the lows got higher, but the stochastic didn't go below 30 there. So you wouldn't have got that signal. And likewise through there, the low got lower to that one. So in this case, you wouldn't have taken that signal. And then it started turning over, bearish divergence, and then the subsequent trades from there. So hopefully that gives you a bit of an idea of an entry setup that you could consider and you could backtest as part of your own strategy when it comes to cryptocurrency trading. You can actually apply it across forex pairs, indices, and so on, commodities as well, and you can look to trade it on different time frames as well. Maybe go down to the hourly chart in a downtrend, looking for bearish divergence or the highs getting lower, and overbought into this area here above 70, and then looking to trade that signal short. Likewise again, what did that get to? 76, yep, so that's above 70. So just through there would have been the potential for an entry setup. Well, hopefully you like this video and there's an opportunity to consider from a backtesting point of view. If you did, please give it the thumbs up and also subscribe to the channel. We'd love to have you on board. Thank you very much.